Hello, so my name is Deepak, and today I'm going to talk to you about Costco Wholesale. No, I'm not going to tell you a story of that I went to Costco and bought something from them and how it worked out and whatnot. Now, I'm going to talk to you a little bit about Costco finances. I'm going to talk about their valuation, what are some of the risk reward ratios right now, what's going on with Costco, what are some of the problems that I'm seeing with Costco, and do I want to get into Costco? I'm going to try to address all of those things with you and share it with everyone. So if you're interested in Costco, I think it's a great video to watch. And by the way, I think everybody should be interested in Costco. Costco is a great company. I mean, we all shop at Costco. I don't need to explain to you what Costco does. I don't need to tell you that they're a great company. I don't need to tell you that they've been around for a long time. I don't need to tell you that they have been expanding a lot. I don't need to tell you that their customer base is very loyal to them. I don't have to tell you any of that. I think you already know all of it, right? And that's what makes Costco very attractive, that average Joe understands the company. So because they understand the company, it's easy for them to buy a company, right? So that's why when we look at Costco, and like I said, it's a poster child. You look at any numbers from anywhere. You can take a look at their revenue. You can take a look at the number of stores, their members, their renewal rate, their cash flow, earning per share, net income, whichever metric that you love, you can go check out for Costco. It's going to all look great. But there's a time to acquire shares in a company. There's a time to let them sit and let them grow. And there's a time when you want to get out of the company. And oftentimes we kind of miss the timing, and we kind of, either buy it when it's time to not buy it. Sometimes we hold the company hoping it will turn around, and sometimes we don't buy it because we think it's too expensive. So there are all kind of problems like that. And that's why we need some help with that area. Why? Because nobody teaches us all this in a school. And if you take a look at some of the valuation classes online, and I went to Stanford and sit in some of those classes there. I took some classes online, and you know who I'm talking about, man, they are difficult, right? They're difficult. But Peter Lynch has talked about this many times, that you don't really need to be a financial expert to be able to invest in great companies. You need some common sense. You need to be able to just develop that art of investing. And once you have developed that art, you're able to make a lot better decisions than what most other people can. So that's what my focus is. And that's what I'm going to share with you guys. Now, I'm not an investment advisor, so I'm not here to tell you to buy Costco or sell Costco or hold Costco. Please, I certainly don't want to advise you on that. And I'm a tax advisor, so if you need some tax help, you can certainly reach out to me. But as you guys know, I run a discussion group where you're welcome to share ideas with other group members. Ask them, what their thesis is on a particular company, or what are they buying, what are they selling. You can certainly discuss with them. But more importantly, now I have an official coaching program. So those of you guys who are not familiar with it, it's a coaching program where myself, Anidya, and Chitsur, the three of us get together, and we're pooling our money together, and we're investing it as one pool, and we're going to be sharing what are we buying, what are we selling, what our thesis is, and share it live with all the group members. So that's what the coaching program is about. So that way you can kind of learn how we think about it. Now, three of us don't always agree on something, and I think that gives us a very good edge. That means sometimes somebody is willing to take a lot more risk, but other people can kind of like, hey, hold on, maybe we're making a wrong move there. But I think together, three of us, we are going to do great, because I know Chitsur and Anandya, they're really, really great with finances. They can look at things from a technical point of view, from a fundamental point of view, from economical point of view. And I think the end result is going to be beautiful. So if you're interested in joining that program, reach out to me via taxcodeadvisors.com, and I'll share some information with you. And right now we're giving an early bird discount. So anybody who wants to join, you will have a special discount on that program. So anyhow, I don't want to spend too much time discussing about the program. I want to get back to Costco, but just want to point that out to you guys. If you're interested, definitely reach out to me. So let's talk about Costco risk and reward right now. So what is the risk? Well, the biggest risk right now is tariffs and recession. Okay. Now on recession, I think jury is divided. Some people, some great financial experts, that people I follow, the people I listen to, they think we are entering in an era of another growth. Why? Because of all the momentum President Trump has built around him. And then There are economic pundits, people who are paying attention to the market, who are watching unemployment, who are watching interest rate not dropping, who are watching inflation rates still continue to be very sticky. They're saying, look, these problems are still here. They were there last year, they're still here. And what President Trump is doing is only going to make these problems worse. And because of that, most likely we're going to get into recession. And if we don't get into recession, we're certainly not going to see a lot of growth in the country. So that's where we stand. So that is a risk. So I cannot just close my eyes and just invest my money without keeping that in mind. Now, whenever we talk about risk, it's the probability. It may happen, it may not happen. So I can't also not invest into anything and just hope that, I'm going to get out of the market, I'm going to save cash, market crash, I buy. If I go that route, most likely I will burn myself. And I also can't go put my money in a lot of risky spaces where if market does go down, they're going to get hurt a lot. So there's a balance I have to play right now. So that's one problem. Second problem, which is more obvious than recession, is tariffs right now. And Costco is one of those companies that is going to get hurt quite a bit from tariff unless they figure out a solution, right? Why? Because 50% of their products are all imported from China, Mexico, or Canada. I mean, we're talking about billions of dollars. I mean, in matter of fact, you don't even have to be super smart to figure it out. In 2024, they did $254.5 billion business, okay? And their margin is very, very little. Like they run on a very slim margin. I mean, you can say most of that, or at least half of that, is an import from those three countries. And if we don't find a solution for tariff, what are some of the solutions? Well, one solution could be is President Trump works it out among these countries. So that's one solution. Another solution is that Costco decides to pass on that cost to its customers, and their CFO in the last earnings call did talk about that there is a possibility that they might have to increase the prices. Well, if they do that, then we have a possibility of sales slowing down, or the other possibility is that maybe sales doesn't slow down and everything is just fine. Okay. Another possibility is that Costco can go back to its vendors, and they have also talked about that on the earnings call as well. That hey, let's talk to our vendors and see if we can reduce the cost. Or another option is that Costco says, you know what, this is a temporary issue. Let's keep our customers happy, and we just simply going to absorb the cost. But you can see in all of these scenarios, there is a probability that Costco is most likely going to miss out on the next earnings as well. So they missed out on their first earnings. There's a high probability they're going to do that on the second one. And if that happens, we saw that stock was trading at almost $1,100. It went down to, I think, 890 or something like that. Right now, it's around $900 today. It can easily go down to 700. And then if we hit recession along with tariff problem, then it can even further go down to maybe 500. Why? Well, because, see, Costco for many years have traded at very high valuation. And there's a reason for that, because of consistent growth, because of great return on capital, because their earnings has been good, there's some predictability in the company. And most importantly, I think people understand the company. It's like you don't need to figure it out. So, I mean, I get that. But if I take a look at their valuation today, for example, okay, let's compare it from last 10 years. In last 10 years, if I go back to February, so just a month ago, stock was trading at almost 63 PE, okay, 63 PE for Costco. And which, by the way, I'm okay with 63 PE if the company has a lot of margin. But Costco is one of those companies that doesn't have a margin. So it's like they have to really be set up for perfection. There is no room to make mistakes. So when they, when their dollars go here and there, that can create a lot of problem for their earnings. But the good news is that they haven't created a lot of problems. For years, they have been able to execute. So as an investor, we sort of trust Costco that no matter what the situation is, they're going to be able to figure it out. Now, from a 62 PE, just because they missed that one earning, it went down to 52 PE. Okay, so you can see the multiple already dropped. Now, in another week, April is coming. Okay, tariffs go live at that time. I have a feeling that there will be a lot of volatility at that time. And if I'm not wrong, and if that volatility is a little bit more sticky than the last time, the PE can easily drop from 52 to 42. So I wouldn't be surprised because, like I said, the tariff problem is real, recession risk is real. So when the risk is there, investors typically tend to decrease that PE. So those are the reasons why I got out of Costco the day they announced the earnings and I saw they missed the earnings. So this is not the time I want to be in this company. I would rather be in another company where I don't see that if recession happens, the multiples will come down so dramatically. So that's my take on it. So let's talk a little bit about the valuation. Okay, right now, company is earning. So let's take a look at its earnings. Okay, so in 2024 they earn about $16.50, and in 2029, 5 years from now, they expect to roughly be around $28. Okay, so 5 years from down the road, that's what the analysts are expecting. So we need to kind of figure out what do we want out of Costco. So I'm going to say that, look, instead of looking at 2024, I'm going to look at the trailing 12 months. Okay, so we'll go ahead and count the growth for this year as well so far. And I'm going to say if they are able to just grow the earnings by 1%, just 1%, and I would say if the earnings multiple should be around $40. Okay, you can see it's right now it's $50, or was it $50? Let me double check that for you. What was it right now? Yeah, 54. Okay, which in my opinion is still very high for this company. I think we should be, but forget about that for a second. But let's just say if you're able to buy at 40, because I'm not gonna buy something thinking I'm gonna get premium on it. I want to get a fair price on it. And if I want to expect a growth of 20% per year, that means I have to buy Costco for less than $300, maybe $280, maybe $290, around $300. If I'm able to buy Costco at $300, I'm in. I'm good. I'm very happy. Problem is, it's trading at 900. Do you think it can go from 900 to 300? I don't know. We got to wait and watch. But 300 is a price tag that gets me really interested in Costco. That is what I look at. So when I look at the valuation, that's the number that gets me excited. But that's not the only number you make your decision on. You got to take a look at the growth. You got to take a look at what other people are willing to pay, what other people are thinking. That's where the money comes from, right? Market, I don't dictate the market how they're going to operate. All I'm saying is if I can get this stock for $300, I'll be very happy. I'll be happy to hold it for next 20, 30 years and make some good money off it. Problem is, if I buy it at 900, okay, I cannot safely predict that I'm going to be able to make any money on it. Let's just say if I reduce my growth expectation by 10%, okay? If I reduce the growth expectation to 10%, now I have to buy the company at 450. If I buy it for anything beyond 450, I won't even hit 10% if company is valued fairly at 40 PE. Okay, so you might say, well, you know what, maybe you're just way discounting Costco. It's never going to go to 40, okay? Which I disagree with you. I think if we hit recession, if tariff risk is there, I don't see why it cannot be at a 40 PE, okay? But let's just say if I go with you and I increase the PE to 50, I still got to buy the company at $560. If I don't buy it at $560, I cannot even expect a 10% growth in this stock. So again, very, very risky. Now, if I go back to the PE of 62, like it was trading, just a few days ago, in that case, I can buy it at 700 and I'll be just fine. Remember, expecting only 10% growth. But my question to you is market willing to pay 62 PE for only 10% growth. So you can see right now the risk reward ratio for Costco doesn't really work out in my favor. Now, let's just say if Costco is able to grow its earnings by 5%, okay, which is looking very difficult right now. Now what happens? So right now, and earlier I was assuming that they are going to barely make a little bit more money, but let's just say if they're able to grow from 17 bucks, they can add, let's say, another dollar per year or something like that. And if I go back to my PE of 50, okay, even then I still have to buy the stock at 700 bucks. So no matter which way I look at it, I cannot get past that 700 bucks mark. That means anytime I buy it over 700 bucks, I'm taking a huge risk because enough growth is not there. So that's the problem I have with Costco right now. If I get it for 300 bucks, I'll be really happy. I think this trade is going to work out very well for me. But if I buy it, if I pay anything over 700 bucks, likelihood of me making money over the long term is very, very slim in the company, unless obviously they grow quite a bit, which is possible. Because of various reasons. Maybe they decide to pass on extra cost to the customers. Maybe they increase their prices. There could be a lot of reasons why that happened. But I don't know that. Like, that's not the information that is available to me right now. So I cannot predict on that. I got to take a look at what company is talking to me right now and make my judgment call on that. So that's my take on Costco. I love the company. I love the execution. They've been doing it for years. It's always on my radar, so I'm always looking out for it. It's just that risk-reward ratio right now does not work out in my favor. Once again, please don't make your investment decision based on what I say. I'm just giving you my point of view as to what kind of things I'm seeing in the market. If you would like to hear more and you want to see a little bit more detailed analysis where we also look into technicals, we also take a look into fundamentals, we also pay attention to the earning calls and all that. So if you want to join the coaching program, just go to taxcodeadvisors.com and just reach out to me from there, and I'll be happy to send you information on that. If you have a tax question or you would like some advice on your tax situation, then I'm certainly your guy. You can just set up a consulting appointment with me. I'll be happy to help you there. Thank you so much for spending your last 15-20 minutes. Next time, we're going to talk to you about Google because something big is happening with Google right now. So we'll share that information with you very, very shortly. Thank you, and I'll see you next time.